What the fuck is going on? Don't feeling how y'all living? No intro needed. No intro needed. I'm back, man. I'm back. Some of us just want it more. It's a very bizarre day. We had one of our craziest streams of all time. Leopold Aschenbrenner has sold. Now, this is very different from like, okay, I was trying to put this in a comparison. This is not like FTX. This is like 3AC. Okay, like all the gifted, by the way. Rectal, thank you, LaBoom James. This is more like 3AC. And I don't know, Silicon Valley Bank would be FTX. I don't even know. I don't even want to speculate on that. But Leopold Aschenbrenner is done. He's out. He's carried out. And the reason it's like a weird spot is that it's like kind of euphoric in the sense that DRAM's up 15%, Soxo's up 25%, the Qs are up 3%. Like it's a NASDAQ is up 3%. Like markets are absolutely ripping today on news that Leopold is gone. He's out of the markets. It's a wild day. So I think we actually covered it incredibly well. We will talk about it maybe after the interview, but I have what I believe to be like honestly a personal mentor of mine, one of the smarter people in the markets as a trader that I know, and somebody that I am pretty grateful for is mute Discord. What are you talking about? What Discord? Where's Discord? What do you mean mute Discord? Oh, Zoom. What are you saying? Thank you. is Flood. And so if you think back, Flood nailed the memory top. He's still on our charts, and he also nailed the oil top. He's also a frequent viewer of the stream. He's a good friend, and he understands this like fund world better than most. Better than most. I'm just gonna be honest. He's that guy. To me, he's that guy. He also very recently, we cover it every day, had a massive short on memory and Hyperliquid. He was up $2.5 million. He was just binking shit. So emergency stream on an emergency day. Flood is going to come on in 2 minutes. We're going to talk about the markets, Leopold Aschenbrenner, what happened, what this means for the market, what's going to come from this, and what we're going to do about it, how we're going to position a little bit of crypto. He's got about 30, 45 minutes. We're going to cover all of it. So if you're watching on YouTube or Twitter and you would like to chat, twitch.tv/threadguy. I'm going to get up really quick. I'm going to fill up my water. He'll be in here in 1 minute. And this is a rare interview. You don't get Flood very often. So take this one in. If you have questions, twitch.tv/threadguys only chat I'll be reading. Luke, feel free to let him in. Desktop audio is muted, and I will be right back. All right. Let's get it. Let me text him that we're in and we're good. All right, let's fucking go. I'm excited. You know what's crazy? I haven't had Flood on since 2024 to talk about Hyperliquid at $3. That's the last time Flood came on stream. 2024, Hyperliquid was $3. All right, he's here. Let me just make sure he's good. Should be joining. Yo, mic check. We're live, but your camera's obviously off. They can't see you. Oh, it's muted. Yo. Hey. You hear me?
Hey, how's it going? Yeah,
Toby.
we live?
Chat, if you're YouTube, Twitter, whatever you want to chat, have questions for Flood, twitch.tv/threadguy. Flood, wow, what a day. Thank you for being here. And I don't know if you remember this. This is your first time on the stream since you were shilling Hyperliquid at like $5 in 2024. So welcome back, man.
Yeah, that was a pretty legendary podcast where I said, you know, Hyperliquid is the only crypto asset that you need to own and pay attention to, and you can just buy and log off. That was obviously true, but I victory lapped that one enough. I think more interesting things are happening right now. But yeah, what's on your mind, man?
Yeah.
What do you want to discuss?
I also do want to give you credit as a friend of the stream. I have 2 tweets of yours. We'll get over the Glaze session really quickly, but I have 2 tweets of yours on my trading view. The first one is oil top at the top, and then the second one is memory top at the top. But so congrats. So well done on that. We follow your Hyperdash, the Glaze. We know what it is. Anyways, today's a crazy day. I was covering it live. Situational awareness. Boy wonder, Leopold Aschenbrenner he's out. He's sold completely to Citadel. You understand the intricacies better about this better than I do. Like, can you first just set the stage and break down like what has just happened today? And then we could talk about implications after.
100%. So, all right. So the way that, you know, trading works when you're at a hedge fund is that you have a pool of assets. Typically, this is going to be cash or treasuries. And you go to a broker like Morgan Stanley, Goldman, et cetera. And you go to them and you say, okay, I have this basket of assets and I would like to trade other assets and I would like exposure to these equities. You can buy them through your brokerage. You can do total return swaps. You can do options. You can do a number of different things. Now, the reason why you would do this rather than using interactive brokers or something, you know, that like us normies use is that you get a tremendous amount of leverage, and you can basically get much higher margin rates, better financing, bespoke products. You can get better execution. There's this entire business at banks and at brokerages, which is basically called their like ATS, their alternative trading systems. And this is where they basically like block trades for you, try and give you tight execution. So it acts as like both leverage supplier, risk manager, and then they have execution
How much
services,
leverage
which
are
is
we talking?
perfect. So you can get tremendous amounts of leverage on equities, as equity volatility is typically quite a bit lower than crypto. I mean, we get tremendous amounts of leverage on crypto. We get 100 to 1. I don't know what someone like Leopold would get, but you could imagine him getting 10 to 20x leverage on 10, 20 billion dollars.
Oh.
And the reason why you'd use leverage is you really want to juice returns, right? You really want to try and use as little capital as possible while keeping it in T-bills for the risk-free rate of return, and then being able to, own equities or have equity exposure that, essentially allows you to, put on these positions. And if you're a winning trader, you're going to have more and more capital, you're going to get more and more cash, and you're going to continue compounding. Essentially, this guy's thesis was like genius. It was kind of infuriating for a long time, and I don't want to grave dance too much. Like, my heart goes out to anybody who's experiencing like a large drawdown. I've been there in the past. But this guy's strategy was genius, where he said, okay, AGI is coming. AGI is going to need a tremendous amount of compute and energy. And there's going to be a ton of infrastructure build, and these equities are not priced properly. And so we can accumulate these very cheap, and they'll reprice significantly. And he was right. He essentially turned $500 million into, I want to say 10 or, $5 to $10 billion. And then he raised more and got his AUM up to about 20 billion. And then what was reported was on July 1st, which was close to the top of the market, it looked like he had a NAV, which includes leverage. So NAV is different to like AUM or actual LP capital. He had a NAV that was, in excess of $45 billion. So that was like the exposure of his book. Now, the thing to remember is that he wasn't just trading he wasn't just trading public equities. He also had a large privates book. So over 25% of the LP capital or the positions at the fund was in Anthropic equity, which is obviously illiquid. But if he was sharp, and I'm sure he was, he probably went to the bank and said, hey, I would also like to use this as collateral. And the bank was like, okay, we can give you 10 or 20% LTV on something like that. And so this is a good way of juicing returns. Like if I can use, locked hype as collateral to then trade, and I'm a profitable trader, I'm essentially using like free money to some extent, right? So, this is a way of juicing returns. This is a way of like how their portfolio is constructed. But, modern portfolio theory kind of dictates, you never really want to be more than like 5% of the average daily volume as a position size on a stock, on a single name equity. So, Sandisk trades, $10 billion of volume a day. You don't really want to have a position that's larger than $500 million. This is sort of like the rough frame. It's far more complex than this, but this is sort of like the rough framework where if you were starting a fund and you were like, hey, what's like a reasonable risk metric? I would say, okay, your position can't exceed 5% of the average daily volume traded.
Okay.
Right? Now, when you look at his book, including leverage, it was clear that he was 20% of not the average daily volume, but 20% of the market cap of a lot of these single name equities. So that is like way outside the bands. And the reason why you have these constraints around position sizing is that when the market moves against you very quickly, people may know that you have a large position, and then you're going to get adversely selected where liquidity thins because they realize you may be a forced seller, and then the market sort of punishes you. Like markets have an unbelievable way of like punishing people when they smell blood, right? Like if I know that you have a large position in an asset and you're leveraged and you need to sell, well, why would I quote any reasonable price?
This happens every time. I feel like they hunt these positions out, and then you're stuck.
Yeah, well, think about what finance is, right? Finance is a big poker game. There's money in the middle. Everybody contributes money by buying equities, by buying stocks, by buying assets, and then you try and take more money than you put in out by, sort of taking your chips off of the table. Now, imagine there's a pile of money and we're all sitting around a table and suddenly everyone starts rapidly grabbing all of the dollars off of it. It's going to be much harder for you to grab your initial balance. Like this is how liquidity and how markets function, where when people know that you're a seller or they know that you're really concentrated, it's really easy to figure out what your positioning is and for, people to really press the market down on you. Now, what was interesting and probably the most interesting thing about situational awareness was Jane Street was an investor. And Jane Street is probably the top trading firm in the world. Arguably, it could be Citadel Securities, but Jane Street certainly dominated last year as they had the best performance. I was sort of like surprised to see Jane Street invest in a kind of stock picking. It's clear this Leopold kid had a tremendous amount of alpha that was sort of increased by leverage. But I was really interested to see, Jane Street investing, $1 billion, it was rumored, into
Whoa.
situational awareness. And what's even more interesting about that is that when situational awareness was forced to sell their assets, it wasn't Jane Street that bought it, it was actually Citadel. And, if I'm winding down my fund or I'm under duress, right? Like I have a capital call, maybe I get stuck on the wrong side of duration, right? Like I would go to my LPs and I would say, hey guys, like I need capital. You're an investor in this fund. You clearly understand it really well. I need like a bridge loan or I need some sort of financing or I need you to buy these assets from me. And presumably, if you're invested in a fund that holds these assets, you must think they have some value. But Jane Street wasn't the buyer, it was actually Citadel. And Citadel, this is kind of Ken's trade. Ken has done this a few times in the past. He bought Enron's energy trading division in 2001. And then he blew up this natural gas trading firm for $6 billion called Amaranth. And he basically twisted the
Whoa.
knife and sort of gutted that firm as well. So Ken does this. And this is like the Citadel trade. This is their signature Sharky trade. He's done this also to Cliff Asness at AQR. There was a big quant quake in the 2010s where a lot of people were running very similar statistical arbitrage strategies where they all sort of correlated and the market had this sort of like flash crash. And Ken called Cliff Asness and was like, hey, I'll basically buy your fund from you. And obviously Cliff said, no, fuck off. But like Ken has a history of doing this where he's known as like the Grim Reaper, basically.
Whoa.
Ken, yeah, that, there's a very famous, interview with Cliff Asness where, he kind of says, oh, how did you feel when Ken called you? And he said, I heard the Grim Reaper's scythe knocking at my door and I just kept walking towards the light and I tried to walk away. So Ken is known for doing this. And the reason why is like, back to risk management, modern portfolio theory sort of dictates you have these like rules and these are like, best practices guidelines. But the real reason why all of these firms have really strict risk management is because they are running so levered. Like people look at situational awareness as leverage and they say, oh, like this is, crazy. This guy was 4x levered long. Well, Citadel probably has, I don't know, $80 billion of AUM, and
Oh
they're
my God.
probably 20x leverage. But the difference is that they have extremely tight risk controls and extremely tight constraints that prevent them from, ideally having, an event like this where all of their positions are moving against them at once.
Wow. Okay, before we talk about the downfall, I'm curious. I just love the lore. Where does the situational awareness Leopold Aschenbrenner ascension rank amongst the best sun runs ever before today? Before like through June 28th.
Definitely top 5 traders alive, pre blow up, just in terms of going from 500 million in AUM to 45 billion or 500 million to 45 billion in
Wow.
NAV. Like that
Top
that
5.
is a tremendous increase. And he absolutely could have been the best if he had flipped short or something. If he had the ability to de-risk his book at the top during this last memory squeeze when we saw the Micron blowout earnings, this guy probably would have been the best trader of all time because he would have been sitting on billions and billions and billions and billion, 10, 20, 30 billion dollars worth of cash, and then been able to buy the blood. And maybe because they knew they were shorting, they could have put on a ton of, out of the money put options and then, and then even made money on the short. Now, okay. The craziest thing about all of this is like, why did Citadel buy this? Well, one, they thought it was plus EV, right? So they're like, they probably got some sort of discount. They were like, okay, we, look at these assets. It's a momentum basket. They've sold off 30, 40%. We probably get a 10%, mark to market discount just for filling everything and making it easy for Leopold and stuff. You're gonna pay for simplicity and convenience.
Okay.
But the like S tier execution, the like if they're really the goats, imagine this was a way of them covering their shorts. Imagine if Citadel was actually net short these names and then them buying this book because it was very public. And in traditional finance, all of these firms are able to decode with like a high degree of probability what almost every single trade in the market is. And because Leopold was so concentrated and only holding specific names, and he was not a high frequency trading firm, he was like a long only or like long short fund, it was very easy to understand what this guy owned. And then presumably, if you got access to his investor docs, you would know, and it was probably widely circulated, Leopold shopped, I know someone that's an LP in situational awareness, like he did shop his fund out quite a bit and ask a lot of different firms to invest. You would know like what stipulations he has around like, hey, if there's a 30% drawdown, we'll de-risk the book. If there is, X volatility, we'll de-risk the book. I don't know, like I'm just speculating here,
Wow.
but it's not hard to reverse engineer because of the sheer size. Like, for someone trading under $1 billion, even with some leverage, it doesn't really matter. Like, Citadel would, and all of the other firms would be able to see your flow, but they'd be like, this is sort of not uninteresting. They try to match it to a 13F and they'd say like, oh, okay, this is just a small fund. But because he was so large in small cap equities, like 100 billion and less, SanDisk was one of his larger positions. Yeah, Bloom, but these are really small companies for, Google's a $4 trillion company, Apple's a $5 trillion company. Like that's very different to $100-200 billion equity, right? And so because Leopold's positions were so large, presumably Ken could have, Ken and the bandits could have known like, hey, like we know when this kid's gonna cry uncle, and that's the point where we're gonna be able to have, a forced liquidation to sort of exit into. I don't know if that would be like the craziest, sharkiest move ever, but that's what finance is finance is a blood sport. It's a combat sport. For me to make money, someone else loses. And, there was a wealth transfer from people that were short memory to Leopold and people that were Leopold copy traders and people long memory. And then there was a rapid wealth transfer from people long memory to people who were short memory. That's how markets function.
Holy fuck. So how does this actually work? Like the last 4 days, we're sitting here watching the market memory tick down and tick down and tick down. Because Leopold Aschenbrenner at his desk with a FTT $22 line, like waiting, and the banks are calling him. Like, how does this process over the last 3-4 days actually happen?
Yeah. So how does this work? So there's traders at the Goldman broker desk, right? At the trade desk. And, Leopold comes to you and he's like, hey, I just got another $10 billion of cash from Jane Street or $5 billion of cash from Jane Street and all these guys. I want that 4X, 5X leverage you give me. And I want to buy, $1 billion of Bloom, $1 billion of SanDisk, whatever he bought, right? I mean, he held Bloom, SanDisk, Nebius, all the names that are bouncing today. And Goldman's like, okay, this is pretty fucking crazy. Like, that's fine. We'll take your money. We'll place this bet for you. But like the thesis from Leopold and the buy-in, and if you had read his situational awareness essay, was, hey, I think AGI is coming. It's inevitability. Digital God is coming. And these assets are going to be sort of up only in a straight line. And, the magnitude of investment and scale needed is like way off in what people are currently forecasting and calculating. Now, Goldman is sitting there and probably thinking, hey, these guys are fucking crazy. Like, this is the stock market, like, markets go up and down. And then, but it worked. And so Goldman's like, okay, this kid, he's making billions and billions of dollars. And this has happened a lot. A lot of funds have had crazy, crazy run-ups. And then the market starts unwinding, and Goldman's like, all right, well, Goldman Sachs doesn't lose money. So they go, okay, now you get a margin call. And now it's like, we need you to post another $5 billion of collateral, not just because markets went down, but also because volatility went up. And so the expected move is no longer.
So like when they give them the margin call, not to cut you off, they're like, the collateral you've given us is no longer sufficient based off how large your position is. You have to give us more money, or the volatility has gone up. Like, price has gone down, volatility has gone up, or both have happened. We don't feel comfortable with how much collateral you've posted.
Yeah, your ops guy gets a call and probably a few emails saying we need to have an urgent conversation. And you look at the market and you say, okay, here's your exposure, here's your portfolio. Hopefully it's not double pledged like Archegos was. That's why Bill Huang went to jail, by the way. It wasn't because he lost money. It was because he borrowed on the same collateral from multiple banks, juicing his leverage, 2 to 3 times what other people thought. And so essentially, like, Goldman comes to you and they say, hey, we're really worried about the exposure here. We need you to post additional collateral. Leopold is like, well, fuck, I don't have the collateral. So that's why that news came out that, hey, he's raising funds. You're not raising funds when the market's going down because you're having a good time. You're raising funds because you have a liquidity crunch or a call, and you presumably don't want to sell your assets, because when you sell your assets and the market's moving against you, it exacerbates the move. Because now all of these very sophisticated trading firms see you selling and they're like, oh, this guy is liquidating. Let me quote even wider. Right? Let me try and front run this guy and short, because this guy has a huge position to unwind, right? You get stuck. And so, Goldman then goes, all right, like, we need collateral by, market close. And then Leopold doesn't
it's that aggressive, like today.
Oh yeah. We need it today. Like, we need billions of dollars today. And
he's like, I don't have any. I have nothing. I have no dollars.
Yeah, and so you call your LPs like Jane Street and all this stuff, and you go, hey Jane, like I need $5 million. And Jane goes, fuck off. We're actually probably on the wrong side of this too, because they were investors in situational awareness. So they at least somewhat, and it was very profitable to trade these momentum names, right? Like, not only are they making money directionally, long, short, market making, but then also market making the options, because the implied volatility was so high. There was so much retail interest. These names were moving a tremendous amount. And so Jane Street probably said, fuck off. And then Goldman goes, okay, markets are closed, which is sort of nice in this instance. And then they run a process. They call Millennium, they call Citadel, they call, D.E. Shaw, they call Hudson River Trading, and they jump. I don't really know.
Because there's only a couple guys that can fill this. 10 guys, like, how? It's not that many people that can put this money up, right?
Well, there's a bunch of different wealthy people in the world, but like, this Bezos isn't going to pick up the phone for this, right? Like, that's not in his wheelhouse. Like, Berkshire Hathaway could have been a call. Yeah, you call all the big guys with big pools of capital who always have cash. Citadel always has cash. Jane Street always has cash. Millennium always has cash. And these guys have almost like more cash than they know what to do with, right? And so they go to them and they're like, hey, here's the deal. And then Citadel, Millennium, those were the only 2 people who I know were in the process. Citadel, Millennium, then race, and they try and forecast, and they say, okay, what's the price of this? What price should we offer? And then basically best bid wins, right? And so let's just say that was 10% under market. So Citadel wires $10 billion to, Mr. Leopold, well, to Goldman actually, right? To Goldman, wires $10 billion to Goldman. And then, Goldman releases the securities to their account. And this is hard to do because the markets are closed. You don't know what the move is going to be tomorrow, but you have some expected value calculation. And then it's even harder if this liquidation happened while the market was going on. that is entirely possible because we don't know where Leopold actually tripped his like risk limits or the guidelines that Goldman set for them. And so imagine you're trying to compute the value of this portfolio while it's swinging
It's
5 and
just
10%
drilling.
during an FOMC meeting. Yeah. So like, best bid. And it's also like so you have to sign an NDA to do this, right?
Okay.
And you're not allowed to insider trade. But like, you know, like who's refereeing this, right? Right? Like, like listen, you're like if Ken is calling you, you're in a really bad spot. And word gets out fast in finance. Like people talk, and rumors are fine to trade on. You're not supposed to trade on, obviously direct information. That's illegal because it's non-public, but you can hear a rumor about something and it's secondhand information, and that's totally fine. But yeah, the art of this is Citadel is so good at systematically going into something and pricing it and having the balls to say, all right, I'll bid this. Seems good. I'll bid it. And they've clearly made a tremendous amount of money because all of those names are up 30%.
Okay, I know you probably don't want to tinfoil hat this, so go as far as you want. But I'm curious, like this is Citadel's trade, as you say.
Mhm.
How long, hypothetically, would something like this be in the works? Because Citadel has this sort of bizarre publication comes out on Tuesday that we think Warsh is going to hike, and everyone's like,
Yeah.
wait, what the fuck? And it's also at this precarious time where forward guidance is gone. It's his second FOMC, the first one where he could presumably do something, and then the markets start to panic. In particular, the Leopold names, which maybe that was him
Mhm.
selling. I don't entirely know. Start to like scream. Bloom is crushed. Sandus is crushed. Nebius is down 20%. Like,
Mhm.
what is the manufacturing in the background that hypothetically could be going on here, and how long would that have been in the works by someone like a Citadel?
Well, I mean, look, if I'm buying a house, I'm not going to talk about any of the positives of the house. I'm going to try and argue a case for why my price is fair. Oh, I heard gunshots in the neighborhood, and the fence is a little messed up. And oh, there might be some structural issues. Like you're going to say everything possible to drive the market down. I mean, this is the same thing Ackman did where he went on CNBC and he
About
was
COVID and was
kind of,
crying.
yeah, yeah. And he was, talking about how
Wow.
disastrous COVID is going to be. And then in the meantime, he was actually covering his shorts and flipping long. Like, there's nothing, like, is it a little bit shisty? Sure. But like, okay, if I know that a fund is stuck and I know that someone's leveraged and I have the size to do it, like, why wouldn't you press the market down?
Wow.
Because they're going to be far more agreeable when Goldman is about to say, listen, we can dump this into the market. And they go, no. Like, let's find a bidder and let's get this cleanly off our books and go. I mean, Goldman would never really dump it out of the market. That would incur quite a bit of losses. But yeah, I mean, listen, like Ken is not a nice guy. You don't make $50 billion by like
50.
having the best interest. I mean, more probably 80, 100 billion. You don't, you don't become the GOAT by like not sharking people. So yeah, I would do everything possible to get as much information as possible, understand every single thing that this guy owned. Like it's like you're playing poker and the fish has all of the chips and you're like, okay, I'm going to study every single thing that this guy does, all of his strategies, and then I'm going to play a style of poker to try and take all of his money, right? Like that's exactly what finance is. Like this guy was the big fish at the table. But like listen, it's a good lesson for everybody that you can be right and you can make a tremendous amount of money and still end up being wrong. Like Leopold's going to be fine. The question is like, will he have clawbacks on his carry? But like, oh no, boohoo! Instead of him making $1 billion, he makes like 200 million. Like this kid made a tremendous amount of money. Like the people
Wow.
laughing at him, like that's why it's not really fair to Grave Dance. He's done
Of
exceptional.
course.
But it's an important thing where like leverage is often the thing that kills you. It's the thing that makes you, and it's the thing that kills you. Like we almost never lever a fund. It would have to be like a once in a lifetime event for us to even exceed like 2x leverage on a
Oh,
directional
wow.
position for our gross book. Like there's just no need. Like market. I don't know. It's like I have this like tattooed in my mind. It's like markets always go up more than you expect, and they go down way more than you expect, right? Like think about Bitcoin. Like when you first got into Bitcoin, did you think it would go to
No, it's
$100,000?
number is
Like
nuts.
no way, no
Yeah.
way. And then guess what? From 100,000, it's gone all the way down to 60, and then more importantly, from 70K or whatever it was in 2021, it went all the way down to 18. Like
Yeah.
I would have never expected it to retrace like almost 80% because of FTX and stuff. So listen, like leverage is the killer, right? He was right. He was completely right. These names have gone up thousands of percents, but he got a little greedy at the top, and that happens. And you feel this kid has never had a drawdown. Like this is probably the first drawdown he's ever experienced,
Wow.
and he didn't have a tremendous amount of trading and finance knowledge. I don't really know who works at situational awareness. Like I assume they're not the top tier quants. They were probably people who really believed in AGI, really believed that the thesis was right, and they were right for a long
They
period of
were
time.
right. So
Yeah.
what's the game theory if you're Ken Griffin and Citadel? Like they presumably bought everything 10%, give or take, under market. And then I mean Bloom Energy is up 25%, Sandus 25%, Shaw, Micro, all these names,
Yeah.
SK Hynix 20%. Like you're up a
Yeah.
fucking lot. How long are you in these positions for? And how do you think about that?
It's impossible to know without understanding the composition of their entire portfolio,
Got it.
right? So like they may have said, you know what, we're gonna sell a lot of our NASDAQ position, or we're gonna sell some of these hyperscaler positions, and then we're gonna buy these momentum names because they've come down so much. And then eventually we'll rebalance our portfolio to whatever we think is optimal. Right. And they're trading all the time, 24/7, 365.
Got it.
And a $10 billion position is large because of the market cap of these names. Like these names are not, massive companies. So, owning $1 billion of Bloom Energy is actually a lot. That would be single digit percentage of market cap.
It's insane.
Right. But yeah, but, Citadel has hundreds of billions of dollars of equities. So like, this slots right in. They probably made some movements, and then it's kind of fucking business as usual.
Yeah,
Like
yeah.
they'll rebalance out of the positions and go back to their optimal position sizing. Right? They just got a cheap price.
How is Goldman Sachs not just sliming everybody? Like they know what everybody needs at all times. Or
Yeah.
are
I
they?
mean, Goldman
They just are.
Goldman has had like 20 losing trading days on their desk this year. They're going to make $8 billion. Like, yeah, they are tremendously informed about the market, and they would never front run and back run a client. Like there's a lot of like you would never go to the broker that's sliming you, but like, do they know what's going to happen? And do they have a good understanding of like compositional stuff of people's portfolios, net position of retail versus institutional? Like they have a lot of information that other people don't. And whenever you have asymmetric information, you are able to potentially make trades that are far more plus EV than the market thinks. And yeah, Goldman makes a tremendous amount of money. Like here's a key example, right?
Okay.
If you place an order to buy QQQ, and I'm a market making firm and it's payment for order flow, I'm not allowed to then go buy QQQ and then sell it back to you. You're not allowed to get MEV'd, right? You're not allowed to get front ran.
Okay,
That is illegal. But I can trade NASDAQ futures because that's an entirely different product.
Got it.
So that is sort of and again, this isn't my world. I'm not claiming to be an expert. Like this is above my pay grade, but this is sort of the way that, modern finance functions. Is there's people who have strategies, they come to the market, they run it up, and then the market has, has the ability to punish them. But, there were a lot of firms that were on the losing side, retail traders as well, who shorted memory. Like we were underwater on memory shorts for probably like 6 weeks this year. And we averaged up like
that was a brutal 6 weeks as well, by the way. Painful.
It was
short.
Yeah, where it's ripping 20% every day. But like we just had this thesis that these things were a bit overheated. And also this is where like game selection, venue selection makes things a lot more comfy. Like we were being paid 40% on average to be short these names on HIP3, right? So if you went and you shorted on IBKR, you pay a borrow rate to short a stop. It costs you money. if you buy a put option, you're paying theta, which is the time decay of the option. We were short on HIP3 and we were being paid funding. Now you have squeeze risk, you have like weird price jump risk, maybe Hyperliquid could get hacked, you have counterparty risk. So that's what you're being compensated for. But we were being paid to be short these names. And we gave ourselves a large margin of error and we didn't use any leverage. I mean, you're always levered a little bit when you're short because of the way that a short functions, but it was like not a large percentage of like our overall fund. It was like 10% position.
Okay, I have like 2 questions for you and I'll let you go. This is generational. Sure. First question is I don't know, I've always been curious about this idea of like the news or the outcome was, written in the charts and things start to roll over and then they go and then the news comes out and whether it happened because the charts or whether the charts happened because the news, whatever it is. But I mean, I have 2 lines on my trading view. One is the oil top, which is like less relevant, but you sniped it. But the second one was memory. And you were pretty vocal about this. And at the time, like, yeah, fine. Things were euphoric and overextended, but it didn't just go. And you were vocal about this for multiple weeks. I'm short memory, memory top, memory top, memory top. Like, do you think it was topping because guys like Leopold were being hunted? Do you think they're being hunted because it was topping? Like, how and why did this sort of play out the way that it's played out?
The thesis was one, like, memory, and Kyle was far more involved in this trade than I was. But if I had to like architect his thesis, he was like, hey, look, memory and hardware has typically been a kind of terrible business. Historically, it's been a terrible business. It's experiencing the mother of all squeezes. And part of it's gut feeling as well, where you're just like, hey, these markets are up 2,000%. Like, surely it's not a crazy trade to think about shorting them. And the other thing for us was, and this was the component of like why I was bought into this thesis, was I looked at Leopold's portfolio. I looked at the size of the equities that he was trading, and I looked at the size of his fund and how much of the market he was. And then also the follow-on effect of people copy trading him because he had made so much money. Retail traders copy trading him. Other hedge funds copy trading him because they know he's going to buy and push the market up further. So they try and front run that, or they try and tail that, right? Because they know presumably he's not really a seller. He had a long-term thesis on this. And the market is getting kind of overextended. Like, this is going to it's going to sound shitty, but like crypto people don't have any alpha in equities. Like, equities are a extremely difficult and hyper efficient game with the smartest people in the world playing. And a lot of people on crypto Twitter are like, look at Micron's PE ratio. And I'm like, guys, this is fucking crazy. Like, there's no way that you think because you put the 13F or excuse me, you put the like 10Q into ChatGPT and you said like, what is the PE ratio, that you think you have more alpha than like people doing semiconductor research and, like Jane Street and all these, like, it was just like, okay, like when crypto, unfortunately, people are quite late. You saw this with gold, you saw this with oil, and you're seeing this again with memory. When I see people posting a lot of P&L, posting about how this is the craziest run ever, and you're just seeing everybody long memory, you're kind of like, well, who's left to buy?
Who's left to
buy?
Right?
Who's coming in and who is like gonna buy $100 billion of Micron over the next, few months? It's nobody. Like everybody, when everybody is long and Micron is the most traded stock in the market for weeks and weeks on end, at a certain point, the smart money has gotten out of their position and sold to the people that are really late. Yeah. And that more often than not tends to be crypto people, unfortunately.
I'll give you, for my last question, I'll give you credit because the OG stream viewers know you're in here a lot. And we were watching Micron earnings, which is like the greatest earnings of all time. And you were saying something along the lines of like, watch the lack of volatility and like this is the top. And it like wasn't at first. And we were kind of, fuck you, Flood, fucking bear. And then, it plays out the way it plays out. My last question for you is on collateral damage and what happens from here. So there's been a couple posts, I think, from TradFi talking about some other funds are potentially in trouble. This is a little bit of like a weird day. Like, I wasn't that in tune with the markets when the whole 3AC FTX situation happened, but it was pretty dark because there was extreme collateral damage and everything was limit down. Now everything's like limit
Mhm.
up, which makes it like
Mhm.
there's some irony behind it. But I'm curious about collateral damage on other funds. How do you think that will, like, how they're allocated, how that will play out, and then views on the market short to medium term from here? I know you closed a lot of your memory shorts.
Yeah. Yeah, and we closed too early. Like I didn't know Leopold was getting liquidated. Like if I knew that he was going to be liquidated and I had heard some rumor, I mean, I knew he was in trouble just because it's easy to reverse what his holdings were, but I didn't know how levered he was. Like that's just information you're not
You don't
privy
have.
to. The sorry, give me one second.
No, you're good.
What I think happens from here is there's two frames of reference. Like one, maybe AGI is up only, and this is a temporary pit stop. Like we just had to kill some retards, and then it's going to resume up only. We washed out a lot of the leverage, and now the smart money is rebuying. The other frame of reference is like equities aren't really down that much. Like pull up the S&P 500 chart. Like
3%
it
off
looks like
ATH.
it looks like it's a tiny blip. Like the correction hasn't really started. And actually, what happened after 3 hours got liquidated was we had a massive bounce. After 10:10, we had a massive bounce. Things were up 30, 40%, and then they get hammered later. So I don't know. Like, I don't really have a strong bias. Like, we're about 50% cash. So
Okay.
we're pretty risk off for us as we're typically close to fully deployed, like running less than 10% cash. But I think patience is going to be rewarded here. I think that there's a lot of people who have made a tremendous amount of money buying dips and doing mean reversion and saying, oh, if equities are down 2%, I buy weekly options and then I make 500% returns. Or, oh, Micron red, I buy next day it's up 8%. Like that's been the correct thing. And
Yep.
these people have made a lot of money, but that means they also have a lot of money to lose.
Yep.
Right. So what I think is that you're going to be rewarded for patience because there's two things at peaks. One, when earnings reports come out and they are they are like, booming, like they are fucking blockbuster. The market, when sentiment is turned, says, oh, this is a high watermark. It's down only from here. And then if you miss, so that was like Micron, right?
That was
Where,
Micron.
wow, this
How
is
could it get
a
better?
one of one. It literally can't get better. Micron would be the biggest company in the world if it continued growing at the pace that it's grown. Second is SK Hynix, where people say, oh, we're expecting, blockbuster earnings, and then you miss. So it's almost like you can't win once market sentiment has really turned, where you beat too big and the market actually punishes you because they say this is the top, or you miss and you get fucking hammered like SK Hynix did. And it's no wonder that SK Hynix jammed that $27 billion offering in.
Yeah.
But the number one thing that we are looking at and we are thinking about is that there has been $1 trillion of spend by hyperscalers. And I don't know where you can point to me in the financials that there are massive revenue increases other than cloud, which is recursive to some extent.
Yep.
But I don't see where there is some line item that says, hey, we were able to have 70% cost reduction, or Instagram Reels are now 30% more profitable this quarter. There is very little show for the spend, right? Like people are like, why did Meta get hammered? Well, Meta is growing 20% and they're spending to the point where they're now free cash flow negative.
Yeah.
Google is
Google,
the same
thing.
right? Yeah. Now, the bull case is that all of these hyperscalers are smarter than we are, and they've compounded capital at very high rates, and they all feel like this is existential, so maybe this is it. But the like bear case or like rational case is show me the money, right? Like you said, there's going to be crazy gains from AI. There's going to be massive improvements to the business. We'll be able to have massive efficiency gains by firing employees or one employee being able to do the work of 10, right? But that just hasn't happened.
Hasn't happened at all. Best kept secret, right?
Like, show me the money. Like, show me where any company other than Anthropic and OpenAI has had massive revenue increases that weren't cloud. because cloud is a little bit scary because it's recursive, right? Because they invest in cloud, then they sign a deal with Anthropic, and then they book it, or OpenAI, they book it as revenue. And it's like, okay, well, yes, this is like sort of revenue. And so that is what we're paying attention to, where I just think as time progresses and there isn't much to show for it in the short term, markets will continue to get punished for raising capex. And so that's something where it's like, hey, you can just be patient. Like, I'm not worried about missing a 7% move in NASDAQ up. I'm worried about buying the minus 10% of the minus 30% dip. That's what I'm worried about.
And I think it was really good perspective. My last one for you is the obvious elephant in the room is views on crypto, and you're still short Hyperliquid on the Hyperdash that is now labeled flood. And it's been an insane trade. When does that close? And do you think, I don't know, Bitcoin lows are in? Like, are you still optimistic? For a while, you were buying a ton of Bitcoin. You're tweeting about it. I don't know where you're at right now.
Yeah, I mean, we still own Bitcoin. We only own Bitcoin, Hype, and then some stocks, but I shouldn't really talk about stocks because it's like regs and stuff. There's other assets we're looking at that are interesting. But the way we think about Hype is like the way we would think about any asset, which is like, how fast is it growing? If Hype starts growing really fast, then we will buy more of it. If growth sort of stalls, then we'll continue, maybe managing our risk. And also, when you think about Hype, I'm obviously up quite a bit on my Hype. If I sell it, I have to pay quite a bit of tax. So I can hedge it with a derivative, protect my delta, and then I get paid on both sides, because you get paid the Hype staking yield, which is not taxable in the US. And then you also get paid the funding payments, because Hype basis is typically paying shorts at like, mostly the crypto, baseline funding. So I get paid to hedge. And like, if I'm bearish, that feels like a pretty nice trade, and it's very tax efficient. So like, I may be like short Hype, but that doesn't mean I'm like bearish Hype. It just might be an okay use of my cash, right? Like I own Hype and I'm short some against it, and I have other wallets as well. Like it's not like I'm not psyched about making like it's not. I didn't make $1 million shorting. It's just sort of like me protecting the US dollar value of my portfolio and being paid to do so.
Tell you what, scary to see. Flood, you're the GOAT, man. This was an important emergency stream. You're one of the best, dude. I appreciate you you coming on. I think it was a proper number 2 on a whim. So yeah, chat loves you. I love you. You're the GOAT, man. Thanks for coming on.
Yeah. Thanks for having me.
All right, dude. See you soon, man. Have a good one. Peace. We start. Yeah, that guy's. Flood's actually the GOAT, man. I swear, that guy's the GOAT. That was sick. I feel like that was the proper. How to apply for a Clipper to counterpart. I hit up Tulip King. Just start clipping. But thank you, bro. That was hella fun. You're the GOAT. I feel like that was the proper follow-up to what we did this morning. I mean, it just was, right? That was the proper follow-up to what we did this morning. That's the situation. Leopold Aschenbrenner is out of the market. TBD, what's going to happen to the AI trade? I'm excited about crypto. I'm very excited about crypto. Kospi Korean Open in 4 hours and 45 minutes. It's going to be electric. I would watch that. I think patience is definitely key. YouTube gang showed out, by the way. 177 people over on YouTube. I appreciate you guys for being here. I'm live every morning at 8. Should I just drop the pit link? Should I just do it? Should I just blow the pit up right now? Should I just do it right now? Fuck it, before I get off. Should I just blow up the pit right now? Should I just do it? No? All right, I'll do it tomorrow. If people come tomorrow and they ask me, I'll do it tomorrow, 8:30 a.m. I'll blow up the pit at 8:30 a.m. I'm live every morning. This is what we do, bro. We're the best in the fucking game. Whatever's happening, we're talking about it. Stocks, we're talking about it. On-chain, we're talking about it. Crypto, we're talking about it. Perps, we're talking about it. Geopolitics, we're talking about it. Commodities, war, oil, the Middle East, we're talking about it. I'm leaving. I'll be back in the morning. I got shit to do. I got fucking calls. I got meetings. I got shit to do. It's a busy day. There's no breaks. I was on a call after last stream. I got another call. I got shit to do, man. I'm out. I love you. I appreciate you. 8:30. Hey, shout out to Flood, man. Give that brother some love. I would imagine everybody follows him on Twitter. If you don't, and you like the guy you just listened to, he's one of the best in the game. This is him right here, Thinking USD. He's one of the best in the game. Bitcoin class of 2014, man. That's my brother. That's the man right there, man. He's helped me through some situations. He really has. Helped me through some situations. The best advice. Hunter gifted. Flood, I love you. If you want to invite to my Telegram, you can only get it tomorrow at 8:30 a.m. EST. Shout out to Flood. Shout out to the stream. Shout out to the entire Counterparty team. Shout out to YouTube gang. Shout out to Twitter. I love you guys. We live to see another day. Patience. Let's keep it moving. Let's find some spots. I'm out. I will catch you when I catch you. I'll see you when I see you. Tomorrow morning, last stream. I'm off for a week, family vacation. Crazy time for it, but I love my mom. I got to go see her. I'll catch you when I catch you. I'll see you when I see you. Have a great rest of your day. Love you, motherfuckers. Shout out to Flood. Shout out to Thinking USD. Shout out to Flood. That's my GOAT. 2 streams a day, every day. I'm out.